Hello and welcome to Stock Market Foundations, the beginner's course to start investing the right way. My name is Jason Whaling, investor and founder of the Wealth Titans, and I have the honor of taking you through this entire course and answering all your questions along the way. Oh, and before we get started, please note that all the information presented here is for educational purposes only and should not be construed as financial advice. Okay, so please don't sue me for trying to help you learn how to invest. It's pretty much what that comes down to. All right. Now, I recognize that not everyone starts in the same place. And so keeping this in mind, the course is designed to be an interactive and dynamic learning process. Each module covers a specific topic in depth. You can kind of jump in straight to which module you think is going to help you the most. In Module 1, if you're completely new, this is the place to start. We'll cover the basics of what the stock market is and what the stock market characteristics are of each kind of component in the markets. We'll also touch on some of the intermediate insights on how to actually use the knowledge of how the stock market works to your advantage so you can start mastering some of the more advanced investment concepts and descriptions. So that's what Module 1 is all about. Module 2 dives into the movements of the markets. We will briefly cover what Module 1 starts to cover, but then take it to a whole nother level because it's such a big subject. We'll spend time exploring the entire inner workings of the market so you can get a comprehensive understanding of what moves the markets and why. This is really important because most investors act like traders even without knowing it, which results in buying and selling at exactly the wrong times. And we've all had a horrible experience of purchasing a stock or only to have it immediately drop a day or two later, sometimes minutes later. And I guarantee this won't happen to you again after watching this, but I can say that you'll be much more informed and be able to be much more tactical with your investing after viewing this module. In Module 3, we discuss the different types of traders and investors, and more importantly, the difference between trading and investing. If you're not sure what you want to be, a trader or an investor, this module will clearly outline your options and the pros and cons. There are hundreds of ways to make money in the markets, and we'll discuss some of the more common so you can help identify the best combination of what will work for you. Finally, in Module 4, brings us home by providing a basic outline of the different analysis techniques we can utilize to be successful when in trading and investing. Then it concludes with the best next steps so you can quickly put the information that you've gathered from this course to work for you in the markets. I've also included some bonus stuff that has been linked to so you can really get your investing off to a great start. As always, I want to hear from you, so make sure you're getting the most out of this course by leaving comments in the comments section below. I do read it and I do answer the questions. So, without further ado, let's get started. All right, Module 1, Stock Market Basics, Introduction to Market Foundations. If you plan to invest in the stock market and make money, we need to accept that it's not always going to be an easy job. Too many people treat the stock market as if it were a savings account, as if you can just kind of put money in each month and expect it to miraculously grow. The reality is that investing in the stock market successfully requires an education and some work on your part. Just as you wouldn't want a nurse to have gone through a couple of hours of training before taking care of you and doing a blood transfusion, you want some basic education before you put your hard-earned money into the markets as well. It's pretty much the same concept. Increasing your level of financial education is important now more than ever as the markets are becoming increasingly more competitive and complex. When you put your money into the markets, you are in a competition. You're competing with other investors and traders. You're competing with the hedge funds, investment banking professionals, and hundreds of supercomputers trading at light speeds. So before placing a single penny in the markets, we at least need to have a basic understanding of where your money is actually going in the harsh realities of the market environment. Also, did you know that most orders you place actually don't even get to the live markets if you're using a discount broker? It's something called dark pools. Really fun and advanced. So if you're one of those people who likes reading the footnotes and digging into things, look up dark pools. It'll blow your mind. Anyway, this course is designed to pretty much do just that. Dive into the nooks and crannies of the market and give you a basic overview with a little bit of advanced overlay so you get a really good foundation. So in this module, we're going to look at how the stock markets function, basic stock market definitions, the various types of stocks available, dividends, why companies issue stock in the first place, and wrap up with some more common terminology. All right, so what are stock markets exactly? Stock markets are also sometimes called equity markets or capital markets, and they're centers of where shares are publicly traded shares are traded, and these are by public companies. So they're called public companies because their shares trade publicly. It's pretty much as complicated as that part of the process gets. And there are times where you'll hear the stock market's referenced as equity market or stocks called equities. And this term is simply an accounting term just referring to stocks themselves, since stocks on a company's balance sheet are listed in the equity section. And we can get into financial statements in a bit later, but for now just know that when you hear the term equities or equities markets or capital markets, generally we're talking about the stock market. And the stock markets are normally divided into two types. We have primary markets and secondary markets. Primary markets are when companies issue its stocks or shares for the first time. The secondary markets is where investors and shareholders are buying or selling stocks among themselves. So the company is not necessarily involved in the transaction. And that's where a majority of the investing and trading occurs, in this secondary market. So here's how these exchanges that for the secondary market operate. And a stock market is represented normally by a physical entity known as a stock exchange. Stock exchanges are networks that connect investors to each other. They act as a platform upon which traders and investors can buy and sell from each other. And this is, again, the secondary market. Many countries have their own exchanges, but larger countries like the U.S. can have several. In movies and televisions, you'll see them as open floors with brokers shouting and buying and selling and shouting prices across each other for either themselves or their clients. This is mostly for show, since almost everything's done electronically now. Even the New York Stock Exchange building itself, the actual exchange is over in New Jersey. I mean, the exchange floor now is pretty much just for filming and fluff. There's no way better to put it. So the most well-known exchange in the United States is the New York Stock Exchange. And then we also have the NASDAQ. And as I mentioned earlier, both of these are less and less physical locations as opposed to just giant data warehouse supercomputers doing all of the transactions where people used to be running around floors yelling at each other. So let's look at what a stock actually is. A stock or share is the smallest unit of ownership that a company distributes. When you purchase a stock in a company, you are effectively becoming a part owner of that company. As an owner, you have the same rights as all the major and minor shareholders of the company, which includes attending shareholder meetings, voting boards of directors in and out, and voting on major company decisions, such as mergers or acquisitions. Mostly just mergers nowadays. Why do we own stock? We own stock to be a part owner of a corporation, but unless you're doing hundreds of millions of dollars, your stake in the company probably isn't going to get you that far. So when a company earns more money than it needs to continue normal business operations, it can do one of two things. And this is where being a company owner comes in handy. They can either reinvest it back into the company to make it grow, or they can distribute the extra earnings to shareholders in the form of a dividend. It's important to note that dividends aren't necessarily in cash, but we'll cover that in the dividends section. As a shareholder, you benefit from both decisions ultimately. If the company decides to reinvest its extra earnings, you benefit in the long run from resulting growth and increase in share price. In the case of a dividend, depending on the type, you wind up with a cash flowing asset, more cash in your pocket that you can reinvest as you see fit. So you can take the dividend and reinvest it in the company, or you can take the dividend and reinvest it in another company. So even though you are a part owner and you have voting rights, because your interest in these giant, mega billion-dollar companies are so small, we tend to focus on what their growth is and if you're going to get a dividend from them, not, hey, how many shares can I buy so I can start influencing the company? And so now that you're part owner in the company, you can consider reinvesting those dividends in the company or taking them elsewhere. So here's the stock advantage. One of the major advantages of owning stocks when compared to other assets is that they are paper and offer limited liability. So let me explain these two. As a paper asset, all of your ownership is kept electronically with your broker. When you invest in hard assets such as real estate, land, metals, or private businesses, you have physical goods that you have to keep track of and take care of. Another advantage is the liquidity of stocks. As it could take a couple days or weeks or sometimes even months to sell a house, you can buy or sell a stock in seconds because there's such an active market. And so that's the advantage of a paper asset. It's all electronic. You don't have to store it anywhere. You don't have to go look and make sure that your rental property isn't falling apart, and you can pretty much sell it on a dime, unless you're investing in ridiculous penny stocks where it'll take a week or you're going to have to take $1 loss on your thing to sell it. But anyway, don't do penny stocks unless you know what you're doing. Most people don't, so stay away. Anyway, all right. Next, we have limited liability. Another major advantage of investing in stocks when compared to other options, particularly real estate or or investing in private businesses, is the presence of limited liability. If the company loses any lawsuits or other disputes and is ordered to pay hefty fines, which if you've read the news lately about any bank, they pay a lot in fines, the maximum loss to you is the shares you are holding become worthless. They can't come after you personally for your assets. The creditors would not be able to take your private assets because of the protection. You're just a stockholder. You're not actually in the business. They can't sue you. And this is applicable even if the company declares bankruptcy. So if any funds remain after creditors have been paid, well, you might receive a proportionate amount of whatever's left over based on how many shares you have. This almost never happens, though. When a bankruptcy goes through or creditors come knocking, normally the whole thing just collapses and falls apart, and there's no money left over for shareholders. All right, so let's get to the stock disadvantage. Now, our discussion wouldn't be complete if we didn't talk about some things that just kind of don't work for stocks. And one of the disadvantages is it's a paper asset. It's an advantage and a disadvantage. As a paper asset, stocks are very sensitive to government policies such as interest rates and currency inflation rates. And this means that from a strictly economic standpoint, short-term stock returns can sometimes be highly correlated to government monetary policy or people's perception of how the economy is doing. So you get a lot more price fluctuation with stocks than you do with other markets such as physical precious metals or real estate. And then we have the big one, which is manipulation. In terms of foul play and unfair business practices, the stock market is pretty much at the top of the list. Prices are constantly manipulated, especially with lower price stocks, to suit the interest of hedge funds, large banks, and sometimes even companies themselves. However, as you become more educated, you will actually be able to use this to your advantage and save yourself a great deal of pain. But when you are uneducated, your hard-earned money is pretty much up for grabs, as 2008 painfully demonstrated.